Welcome back to Small Caps. My name's Kerry Stevenson, and it is our fortnightly catch-up with the wonderful Tony Locantro from Alto Capital. And in today's fortnightly update, it is going to be crisis or opportunity. Tony talks. G'day, Tony.
Hey, Kerry, always a pleasure. And I love doing these videos, and always good to get some feedback from people. I believe there's someone in the comments section called David Field who follows me around a bit. So thank you, David, for all the great feedback.
David's such a good support. And yeah, we get lots of good feedback about our chats with you, Tony, because here's the thing that I'm seeing. There's a lot of people out there trying to make a quick buck, and I see it on social media all the time. And in fact, I saw one the other day, Tony, you're going to love this one. I've got $60,000. What stock should I buy? And I'm like, seriously? You need to go talk to Tony. You don't just go put something out on social media and say, tell me what to buy. Are you seeing a bit of that? I mean, I find it laughable.
Yeah, well, I got a little bit of a story. A few weeks ago, we were having salt and pepper squid and scallops at Cicerello's in Freo. And the lady on the next table turned around and she said, "Is your name Tony?" And she said, "Oh, I really appreciate your small cap interviews, and I'm just learning about the market." And that was kind of a great moment, because my other brush with fame was a drunken moment in Leaderville. So she was quite appreciative of, probably the learning exercises that we're trying to provide. And at the moment, to be honest, my referral business has skyrocketed. So I'm struggling to cope with the inflow of new clients, and it's now getting to word of mouth. But I don't think we're quite yet at the really stupid money. So there's plenty of dumb money around, and you're seeing that in a lot of markets at the moment. But let's be honest, the financial literacy of people in Australia is pretty low. And I mean, that's, fear, greed and stupidity are rampant. And that's always going to be the case, because not many out there are able to research, able to read what a stock does. They're more inclined to follow an anonymous tweet than listen to someone in the industry. And I can understand that, because a lot of the financial industry is about cut and paste financial plans and just putting people into the same things. But I treat speculation as psychological warfare. And honestly, it's taken me 25 years to learn it.
Why do you call it psychological warfare?
Well, I think you've got to know how certain traders react. I saw a case today in one of my stocks, Exafarm, which we hold a lot of. Someone put 160,000 shares straight on the offer at 82, and that caused the price to drop to 78. So that seller doesn't understand that you need to feed in small amounts to get out of that stock, not upset the nervous traders. So to me, it's all about the psychology. I look at the trading, whether it's ASX or Chi-X. I look at the bids, and you really need to know what the people on the other side are doing, even though it's just numbers. So if I'm buying a stock on the back foot, if I'm selling a stock all the way up, you just got to have an idea of how people will react based on the fact that the majority are wrong in the end. So I love the psychological side of it. Some days I can have, up to 100 phone calls. So pretty much my word count on a daily basis smashes that of a woman.
Tony talks, ladies and gentlemen, smashing that of a woman. Anyway.
Well, yeah, sorry, it's not being racist or sexist.
Sexual harassment.
It's just simply observational.
Yeah, absolutely. But you're right. It is the psychology of investing, isn't it? It's interesting what you just said about trading. Do you think, and this is going completely off topic, but I'm curious, do you think most people are trading or are they investing?
Trading.
Really?
I think those that buy a stock instantly want it to go above their purchase price, and they start to get a bit nervous. When a company floats at 20, they're happy to hold at 25. Once it starts to get towards 20, they panic and sell. I actually put out on Twitter today that this is called the dict with phase. It's where small traders are just playing around in high quality stocks and they have no idea what they're holding and they're just reacting to how other people are reacting. And, pretty much markets are a collective of people with NFI, what they're doing, but everyone needs to follow someone else. And it's often hard for my clients that are selling at multiples and they'll say, well, everyone's buying it. And I said, well, you buy on the back foot, you buy in anticipation of good news, and how you make your money is when the people that react to announcements come in and buy, followed by the technical traders, then followed by the stampede of the dumb money. And that's how you're able to exit stocks based on the dissemination of information and volume indicators. So once you start to get on top of that, I'm happy to sit there and buy quality stocks and then wait for them to multiply, and we tend to sell all the way up.
So would you ever do a sort of a Warren Buffett, buy an undervalued stock, an unloved stock, and keep it long term? Because, I mean, he does. He invests for the long term, doesn't he?
Yeah, it's a bit hard. I mean, I turned 50 this year.
Oh, you youngster, you.
It's a bit hard to do that. In the stocks I mess around in, biotechs and cyclical explorers, you just can't simply buy a stock like Coke or Disney or McDonald's and sit on it forever. And I especially wouldn't be doing that in the ASX at the moment because there's not much value in the bigger industrials. So I think, Buffett became a rock star of investing. People tend to ignore his latest results. The guy does buy a lot of dogs, let's be honest. And he did jump into airline stocks at the wrong time, but he has returned, that 21% per annum, beating Bernie Madoff by 10%. I mean, that's a huge achievement to smash his guaranteed 11%. So I think once you build up that culture, people tend to follow and they'll start applying Buffett quotes to shit stocks, which you're going to fail anyway. And one of the things that stood out when I watched a documentary on Warren Buffett, if the Dow had a good night, he'd add cheese to his sausage McMuffin. So, go hard, Warren. Go hard. When I have success, I'll take my partner out for a nice meal and we might grab a bowl of bubbles. But no, I have cheese anyway on my McMuffins. So, anyway. But look, that's the reputation long-term investors have. But, at some point, you've got to say, well, markets are overvalued. They are going to fall, but you're going to be dollar cost averaging all the way down. And then it might take a long time to recover to the previous highs. So what I'm saying is find good short to medium term opportunities, risk capital in the quality diversified explorers that have upcoming catalysts or biotechs nearing or in clinical trials. And I think that's the way to make money in a market that's going to become much more challenging.
We're going to come on to the stocks that you're buying in a moment, Tony, but I want to just go back to what you said in that the market's overvalued. And I'm going to push back on that a little bit, just because I feel that, governments globally, they are printing the funny money like it's going out of fashion. There is more and more liquidity flooding the market. And therefore, we don't really have to look at necessarily the value of things because the price is just going to continue to increase. For example, property in Australia, insane numbers, like insane. Stock market still on a tear. I feel that I agree with you that they are overvalued, but I would say to you, with all the liquidity, the price will continue to rise until the governments globally turn around and say, whoops, we made a mistake. we're going to change what we've been doing with this money printing, which I don't think is going to happen for quite some time.
I think, look, share prices can fall simply through an exhaustion of buyers. It'll only take a couple of bad sessions. With the property market, the Sydney in particular is not far off the 2017 high. But you have to remember that the trajectory prior to the election was terrible, and the trajectory after the election pre-COVID was even worse. So Sydney was heading towards those double-digit falls, but the market has been artificially supported. It's been pretty much in a trading halt with COVID, and now you've got an article saying that Greater Western Sydney houses are now trading at $1 million to $1.2 million. Now, that is ridiculous when you think about the sizable corrections coming and the fact that for around $1 million, you can buy a really nice house in Mount Lawley over here, which is pretty much 5Ks to the city, cafe strips. You don't have the severe drug problems and social welfare issues in that suburb. Yet, I call it the Sydney Harbour Bridge hugging because you've got a beautiful bridge, beautiful harbour and an opera house, but WA's probably got one of the strongest economies on earth at the moment. So there's no justification to live out in East Broken Hill and pay those prices. And when you think that it's only going to take a handful of couples in a suburb to create price discovery, and before you know it, you have a 10, 15% correction. So I'm saying that markets are fragile. Once we see a 500, 1,000 point night off the Dow, and that's coming, sentiment is going to change very quickly, and you cannot drive a car without reverse. So I think there's far too much hot money in the system. That's going to come out. A lot of these US stimulus checks are going to go on rubbish stocks. They're not going to buy Disney, Coca-Cola, GE, or even the beaten up airlines. They're going to buy crap. So the major indices like the S&P 500 are going to be driven by the index, stops loss selling, and institutional money flow. So I think all this printing, it's a bit of a fallacy because leading up to the GFC, they were saying that there's lots of cash on the sidelines and margin lending and SMSF inflows would support the market. And the market got absolutely poleaxed during the GFC. So I think people overanalyze things. This is an off-the-shelf speculative bubble. It's in property. It's in a lot of stocks. A lot of tech stocks wouldn't know what a PE ratio was. We see CommBank now coming into buy now, pay later. There's going to be regulatory issues. You'd want to get the hell out of that sector because, you know, the greatest retail frenzy in Australia is on the cusp of, I'm saying, some of the darkest economic financial times we're going to experience. And once you turn off JobKeeper and all these keepers, half of small businesses are under a severe financial pressure, and we have 1.5 million Australian households under mortgage stress. Now, that is not going to support expensive property and expensive assets. So I think an economic shitstorm is on the way. And, you know, you can sandbag as much as you can, but it's not going to stop it because once the tide turns,
but, Tony,
it's going to be a rush for the bottom.
But what about the latest job figures that have come out at 5.8% from 6.2, I think it was. So, you know, unemployment figures are going down. Lots of talk about the economy is strong. People seem to be getting back to work and things seem to be not nearly as bad as they are in, say, Europe. So,
oh, look, things are okay, but we can't have it. We can't have it both ways because interest rates are at 0.1.
Yep.
Now that makes emergency levels look like kindergarten. Once you start seeing signs of inflation, the RBA is going to have to act, and that means interest rate rises. The bond market is suggesting higher interest rates. And it only takes the fear of an interest rate hike to kill the property market.
Yeah,
it is far too fragile. I think that a lot of the financial journalists haven't experienced the psychology of a speculative bubble that's been driven on leverage, and it's going to be pretty ugly. Because if you looked at the charts of margin lending around the GFC, it fell off a cliff. So margin lending drove, everyone was taking out margin loans, free holidays, incentives for advisors. And then the level of margin lending, it collapsed, and so did the main industrial stocks. So everything is far too fragile. I think the majority are looking to tomorrow, next week, whereas there's a nasty cliff coming. And that's just the way it is, because you cannot support, 1.5 million households in this country. Oh, that's pretty dire. I mean, how they, all the second jobs are taken by people that actually want to get out and work. Used car prices will come down. Garage sales, I think it's extremely ugly. It's coming. I can look ahead. So I think all this economic good news, I think, things feel good at the moment because everyone's out there spending, but it's going to get very nasty. And I'm hoping that viewers can sandbag their finances, look after their family's interests, reduce debt before issues come in.
Okay, which leads me very nicely onto, with all this talk of potential doom and gloom, because it's interesting, isn't it, Tony? Hindsight is 2020. When it happens, people go, oh, why didn't I see it coming? It's like, well, if you'd listened to Tony talking, he would have told you. So what do they have to do what do you think people should be doing if you're seeing it so wobbly at the moment? And it's not wobbly at the moment, but further down the track, you see that there could be trouble ahead.
Well, I plough through with my clients. We just buy quality small cap stocks and continue to add. There's lots of opportunity. I think I put out a tweet today where I said that some of these stocks are like buying beachfront property in the early 90s. I mean, you look at you look at areas of Sydney such as Curl, Harbord in the early 90s. These were rough areas.
Yep.
And to me, that's the opportunity in some of these small companies, which will become bigger ones, even getting through the market volatility. So I'm just saying, look, have some funds in precious metals. You can do that through physical or ETFs. Have some BBUS as insurance against the S&P, and allocate some risk capital, because, you're not going to get huge amounts on savings. The property game's up. The way to make decent profits is through taking risk, and that's calculated risk, and that's all I do.
Well, I think that's great. And of course, Tony, you know me, I'm a gold nerd. So music to my ears when you say have some precious metals. And just a shout out to those listening, there is a virtual gold conference coming up on the 29th of April. Tony, you've spoken about at one of those before. That was great fun. Yeah. Precious metals, B-Bus. Just explain to our viewers, those that don't know, the B-Bus and how it works.
It's an ETF that trades on the ASX. They're about $1.36. So that tracks the S&P 500 in the US. So for every 1% the S&P 500 falls, the BBUS should increase between 2.25% and 2.75%.
So it's hedging. So you're just hedging against the volatility on the other side.
Yeah. And what I've said to my clients is we've had huge success. At least insure 10% of your portfolio. I've taken that a little bit further, and 16% of my net wealth is now in the BBUS.
Okay. Interesting, 16%. And precious metals, you've got a bit of an exposure to that, gold or silver?
Yes, I do.
Gold and silver, or do you prefer one?
Silver. Silver's my preferred commodity. I just think that there's enough talk about it. There's shortages at the Perth Mint. There's more
allegedly.
But I just think that silver is the poor man's gold, and I think it's a market that could be easier manipulated. I mean, pushed in a northeasterly direction, and I think there's far more explosive upside in the silver stocks.
Rightio. Well, let's talk about risk capital and some of the stocks that you're looking at the moment in that risk capital allocation.
Red Metal came out with a fantastic announcement that they're going to spin out Marin, which is one of the largest undeveloped lead silver deposits in Australia. So the plan is to give that project dedicated management and capital, whereas red metal shareholders will retain 50% of it. And I think once you drill out that project, it could, they're talking potentially another Cannington. So as the market cap of Marona Metals climbs, red metal shareholders should get that benefit, as well as the chance of an exploration discovery in its own right, because they've gone alliance with Oz Minerals.
Okay, so are Oz Minerals going to be funding it?
They're funding a couple of $1 million in exploration with red metal, and they're always looking at project generation. So red metal is going to drill a number of projects this year in its own right, and full merit to Rob Rutherford. That company's been listed 13 years and they've still got under 250 million shares on issue.
Yeah.
So that protects shareholders with a conducive share structure to one big drill hole. So I'm pretty much happy to keep buying that. My clients and we own about 10% of the company. So yes, I'm talking my own book, but I'm not going to come on here and talk about someone else's stocks.
Absolutely not. With Marin, so that gets spun out. When's that going to happen? And how do you? I mean, you've talked about how you see it benefiting the shareholders. Do shareholders get an option in Marin, or how's that?
They will only get an option to buy the new company, but red metal retains half of it. So rather do an in-specie distribution and get walloped because people treat free shares with zero respect, I think it's best to hold the shares at half to red metal. So if the market cap of Marona gets up to a couple of $100 million, then it's easy to judge what that is relevant to red metal shareholders. So I just think it's an amazing deal, and we've got to see it go through the processes. So it's only just been announced, so it's going to be a longer process, but well worth it, considering that I'm so bullish about the upside potential in silver.
Well done, Rob Rutherford. What else are you looking at, Tony?
I'm also been picking off Chimeric, CHM, 29.30 cents. So they're involved in the synthesized toxin of a scorpion to treat brain cancer.
Oh, wow.
So, yeah, it's an interesting one. They're in phase 1 trials in the US at the moment. Paul Hopper is running that. He was previously involved in Viralytics. They got a nice takeover. So I think Paul is working towards building a serious biotech company. But in between news, you're just going to see it run up to 34, back to 29. It's just going to trade between those levels, because the liquidity allows you to change your mind 10 to 20 times a day if you deal through ComSec.
Okay, what's next?
Yeah, Oryamin, I'm just going to keep buying. They're 23 and a half. Great projects, 2 great projects, great management that worked under Bill Beeman. They've got all the expertise to build a serious gold company. So I think that's one that you just keep buying the tickets in and let the management do the rest. So we're still buying the crap out of that.
And I'll interject there briefly just to say that Oryamin will be presenting at the virtual gold conference as well. So if you want to hear direct from the speaker's mouth, Brad will be presenting on the 29th of April. So you can get an update. Not you personally, Tony. I'm talking about the market, because you already know everything.
Well, not quite, but I think Brad's potentially one of the rising stars of the industry. And these people that have learnt the model, I mean, Bill Beeman has exceeded the model. He's pretty much written the textbook on how to build a gold company. But I think Brad and the Oryamin team can work well. If they jag a high-grade intersection, obviously the stock will re-rate. I'm just looking for solid results and a chance for my clients to get well set in this, because when some of our other stocks are running, they'll say, well, I haven't got enough. And when you have 250,000 shares and you get down to 100,000, the stock keeps going up. It's like trying to buy a pack of Chewy with $100 note. You just don't want to break it.
Righto, what's next?
I'm still been picking up Metal Bank, 1 to 1.1 cents. I actually heard that the Reddit traders got hold of that and pumped it to 1.6, 1.7, and it's dropped all the way back to a cent. and they have some large projects in North Queensland. One of them, we're waiting on results, and the other one is a multi-million ounce gold target, and they'll be drilling that one. And that stock has gone absolutely to sleep. So I've actually gone in and started buying this again personally. And I just think that if they have a decent intersection, this stock could trade over. I think it could trade upwards of 500 million shares in a day, because I know that the PIP traders are starting to have less opportunities. So I just think in the event of a major drill hit, I think that stock could multiply in a day. Again, it has good management as well, who I just think the stock, you know, when you're priced like a dog, you've got to bark like one. So I think I'd like to see it move away from 1 cent, but whilst it's here, we'll continue to accumulate. I've also helped Narada with a major capital raising. So that was $11 million at 26 cents. They're trading around 30.
Now, just explaining to our viewers that Narada, no, it's not a resources stock, ladies and gentlemen. This is a biotech.
It's a biotech. They're developing a cholesterol drug to reduce LDL cholesterol. And the topic of note is concussion and brain injury in football players. There was an article in the AFR a day or two ago on TBI, and Narada are looking at ways to assist with concussion and the impact of stroke. And they have an alliance with the Walter Reed Military Institute in the US. And it should be noted that 1 in 25 military personnel have TBI.
How many?
Traumatic brain injury.
No, I know, but how many? 1 in?
25.
1 in 25 have a TBI.
TBI, yep. And this also affects paratroopers when you're jumping out of a plane. So interesting statistics, and the market, I believe, has underrated that alliance between Narada and Walter Reed. So admittedly, people thought they might have had a bit more of a cash runway, but the capital raising's pretty much 2 tranches about to be put away. I should disclose that my client base hold a lot of the company, but we're there for the longer term. So happy to keep picking that one up.
Okay, we're running out of time, so we've got one more on the block, or is that your lot for this?
I'm happy to provide one more. Zuleika Gold, ZAG, just raised money recently at 5.5 cents, has been absolutely smashed around 4 cents. I believe is a much better exploration company than what the share price is trading at. So I'm just sitting back and buying small amounts personally as it gets belted. I think they have some outstanding ground in the Zuleika share and a chance at a discovery. So, I'm buying on the back foot, but sometimes that's the best time to buy. And speaking of back foot buying, we're also been picking up some Godolphin, which it's going through, sentiment on that stock has rock meets bottom. The assets support the market cap, and people feeling down on the stock hasn't changed the formations at Copper Hill East. So still a chance of a discovery, remembering that the best discoveries in Australia have often come from stocks that looked absolutely terrible.
Well, that's right. And they turn around pretty quickly now.
Yeah.
So just going over those very quickly, we've got Red Metal, Chimeric, Oraman, Metal Bank, Narada, Zuleika Gold, and good old Godolphin. And as you said, now, one of the things I've noted with each one of those, good management, really interesting. You can have the best asset in the world, but if you've got bad management, ladies and gentlemen, it's not. I don't believe that it's a good thing to invest in. Bad management can ruin a good asset.
Absolutely.
Now, last comment before we head off. You mentioned Bill Beament just a little while ago, and everybody knows he built Northern Star, because I remember back in 2011, he came to our gold conference and the stock was, pennies, and, went riding up to about $13, $14. It's now sitting at around $9. Bill's off, and he's now looking into the copper sector with, what's it called? Is it VentureX? Yeah. What's your thoughts on that, Tony?
Well, I hope he's ensured his capacity for building companies for a lot of money, because that added an absolute shitload of wealth quickly. So I'd have to go and look at the fundamentals again and look at how much of Bill Beament's appointment has been factored in.
Yeah. Do you know
think
what?
yeah.
When we come back in a couple of weeks, let's revisit that. I'd love to hear what you've got to say about Bill, from the movement from Northern Star to VentureX and your view on it. And I'm sure some of our listeners would as well.
I mean, Bevan Slattery in the tech space creates instant wealth. And I think Bill has started that process in mining. So every bubble has your rock stars.
Every bubble does. Any last comments before we finish up for today, Tony?
No. See you in a fortnight.
Thanks for joining us on Small Caps today, Tony Locantro from Alto Capital.
Pleasure.